Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Money managers slightly increased bullish positioning in gold and silver. Also, the next step for gold is to breach the $1,900 peak level. So before we start, I want to mention, if you think that precious metals have potential, if you think you are bullish on gold and silver, make sure to smash that like button. If this video gets 200 likes, then I will know that we are definitely all bullish on gold and silver, and the real potential lies within the next coming months and years, which is highly likely. So anyways, it seems like on the subject of bullish precious metal prices, it seems like other people are starting to get in the swing of things as well. Money managers upped their net bullish posture in gold and silver futures, but not by much. During the most recent report for data compiled in the Commodity Futures Trading Commission, the CFTC, during the week of April 28th, covered the last CFTC report, COMEX June gold rose to $34, $1,722 an ounce, while May silver rose 33 cents to $15.32 an ounce. Net long or short positioning in CFTC data reflected the difference between the total number of bullish, long, and bearish short contracts. The traders monitor the data to gauge the general mood of speculators, although excessively high or low numbers are viewed by many signs of an overbought or oversold market that may be ripe for price corrections. So the CFTC's disaggregated report shows that money managers' net long position in gold rose slightly to 146,000 futures contracts from 146,271 the week before. This occurred as the short covering slightly outpaced the long liquidation, as both bulls and bears exited from the market. Gross shorts fell by 1,602 lots, while the total longs declined by 1,467. Despite a fiery performance in risk assets amid hopes of the great reopening, speculators added to their gold length. So Commerce Bank analysts Carsten Fritsch commented that a massive rise in public debt and unprecedented steps taken by central bankers to combat the economic fallout from this virus pandemic should benefit gold. And he continued, huge holdings by global exchange traded funds have risen lately, increasing by nearly 160 metric tons last month. However, he said speculative interest in gold from futures remains limited, while bullish positioning remains at a comparatively low level. Meanwhile, money managers' net long position in silver rose to 14,489 futures contracts from 13,791 the week before. The fresh buying outpaced fresh selling, as gross long rose 1,785 lots and gross shorts climbed to 1,087. So anyways, I know that's more from the ETF side of things, but it's still showing bullish opportunity and where the volatility is and where the volume is, and that's really important when we're looking at silver going forward. So our next article is from Kitco, talking about the next step for gold is to breach the $1,900 peak level. And it's interesting to talk about that, because if gold does break above that level, the sky is the limit, right? That would be the highest we've ever seen gold, and that's going to really showcase where prices could go, especially for silver, if silver is going to be staying up with his older brother, which is the yellow metal, which is gold. And it's going to be interesting to see what silver does as well. It's going to be very interesting times coming up, especially to see where this virus takes us, if we're going to still continue to see bullish prices, or if things are going to correct back downwards, where the gold to silver ratio is going to take us. We have an upcoming U.S.-China trade war that might be resparking. The negotiations may be resparking as President Trump threatened China once again. So we're living in interesting times. I am curious to hear where you think the gold to silver ratio should be at. Do you think it should be in the lower range, or do you think it should be as high as it is? I definitely don't think it should be above 100 at all. It should be around the 60 to 70 to 1 level, but we're seeing ratios extremely oversought, exaggerated to extreme lengths. So anyways, the next step in gold's recovery is to tackle the $1,900 an ounce peak reached in 2011, and that was when we saw $50 silver as well. According to the latest commodity update, Bloomberg Intelligence, gold is looking at a similar launch pad as in 2008, when prices breached $1,000 and began to rally, which led to all-time highs of above $1,900. So we saw gold go from $1,000 to $1,900. We saw silver go from like $9 to $50. So that shows the real potential. A lot of people don't talk about that. A lot of people don't talk about silver being $50 not even 10 years ago, right? That's unheard of, because people tried to downplay silver's potential. It was the cut to zero interest rates by the Federal Reserve in December 2008 that accelerated the gold bull market to the 2011 peak. This virus is worthy catalyst to buoy gold towards its highs. That fact, the metal has reached records in most currencies, leads us to expect a similar result for dollar-denominated gold is only a matter of time. Gold is set to hit new 2020 highs on unprecedented Federal Reserve monetary stimulus. With base rates at zero or negative, the Federal Reserve embarking on a seemingly unlimited monetary stimulus akin to 2008, we see gold extending its $1,900 an ounce peak as the next in a stair-step recovery process, and it's going to be like that, right? You don't want it to just explode overnight. It's going to go up, and it's going to plateau a little bit. It's almost like a stair, maybe even drop sometimes, and that can only be opportunities to buy back in if you missed a chance earlier. So the quasi-currency price has a strong relationship with the Fed rate expectations. So you can see right here gold breaking this peak. See right here, gold spot is in the gold, the silver is euro denominated gold, and the pink is the federal funds target rate. So anyways, surging debt to GDP levels are the key thing to pay attention to with unprecedented stimulus when it comes to gold prices. The propensity of governments is to indiscriminately flush systems with cash on the back of this virus demand shocks, promises to add similar buoyancy to debt to GDP along with gold, strategists said. The U.S. dollar is not even the real threat to gold's attempt to at $1,900 anymore, as the precious metal did not need to wait for a peak dollar. And that's definitely interesting to note, because the dollar index is really interesting how it correlates with gold and silver. Gold is showing divergent strength versus the dollar, similar to the early days of the bull market to start the millennium. Our graphic depicts the upward sloping 50-week averages for gold and the dollar akin to 2001-2002, when the greenback peaked about 2 decades ago. It was a launch pad for gold. In the commodity space, it is precious metals versus everything else, as the former is only the sector reporting 2020 gains. The extent of the virus-fueled global recession and corresponding monetary stimulus are firm tailwinds for gold and obstacles for most other commodities. We see the favorable pre-outbreak conditions in place for precious metals versus other assets simply accelerating, he pointed out. So the dollar definitely does have some to play, but there's a lot of different angles that's going to get gold above $1,900 an ounce, right? We can talk about. First one that comes to mind is if the U.S.-China trade negotiations do get sparked back up. Imported, exported goods could be shut to a halt, and not even that, we also have this virus on top of everything too, which is kind of what it stemmed from. They have their two separate issues, but they're all going to combine into one, which could be very, very, very risky waters. I mean, think about China being the second largest imported and exported good, for on that forefront, and then we have a metal that has increasingly high demands because silver is used such as an industrial metal, which could be ground to a halt. We also have the diminishing supply from these mines being shut down due to the virus. But not only that, kickstarting back up is going to take time. It's going to be a lot. There's going to be a lot going on, and the prices are going to be extremely volatile, in my opinion, until we get some grounds and we gain some stability in what direction the economy is going to go. Nobody really knows that right now. It's all a guessing game. No one has a crystal ball, so it's going to be very interesting times in the next coming months and years. And I definitely think that even though times are going to be interesting, it's only looking towards bullish gold and silver prices. I mean, think about this. When the economy is doing worse, gold and silver do better. And looking forwards, the economy is only going to be worse and worse and worse. I mean, we've oversaturated the dollar. There's no hope for the dollar, basically. The dollar is going to fail. The system is going to crash. It's just a waiting game at this point. We've already seen third world countries, their dollars crashed. They carry their money in trash bags, and it's too late for them, and we're on the same path. Every fiat-based currency is. Every financial system is set up to fail. So anyways, I'm going to wrap wrap this video up here. If you did enjoy this video, if you did enjoy anything you heard in these two articles, make sure to smash the like button. Let's put a like goal of 200 on this video. If you stuck around this long in the video, thank you so much. I appreciate the heck out of you for tuning in this long, for watching through the video. It means a lot to me, especially the ones that like the videos as well. It helps support the channel. So if you thought this video was educational, informational, or just entertaining, make sure to smash the like button. Subscribe. I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.